Should you invest in Charles Schwab? Let's analyze it on GrowthShares. I'm going to look at 6 metrics that will give me a better understanding of what kind of company I'm looking at. You see here that they're weighted differently to go along with their importance. Each metric is graded from 0 to 99, with 99 being the upper end of the scale. After that, I'll put everything together to get our company's final grade. There will be quite a bit of info in this video, so I encourage you to pause this video at any time. Intrinsic value. I use a discounted cash flow model to determine the fair value price of our company. While the next 5 metrics deal with how good of a business we have, the intrinsic value looks at what price we should pay for the stock. I'm obviously looking for a company that's undervalued. That's an intrinsic value at least 17% higher than the company's current stock price. We want that margin of safety just in case our calculations are slightly off. What we find is an undervalued stock, but just going by prices and everything. Why is the price undervalued? The other 5 metrics will tell us if we have a good business to justify that price. Earnings growth. I figure earnings growth through a combination of projected earnings over the next year, over the next 10 years, and then discounted based on the current inflation rate. What I'm looking for is a growth rate of at least 8%. That's not unreasonable and very attainable for a profitable company with room to keep growing. If growth is anything less than that, the other metrics will need to make up for it. I have a growth rate that's promising, and that's a good sign the company is still growing at a rate higher than average. PE ratio. The price to earnings ratio tells me at what multiple the stock is trading at compared to its earnings. I'm looking for a PE ratio of 15 or lower. That's not a hard and fast number based on the type of company, but as a general rule, the lower the better, since the PE is a key valuation metric. The PE here is average, and one indication is that most investors are already pricing in its relative earnings. Dividends. Dividends are an underappreciated metric when analyzing a company. I'm looking for a dividend yield at least 2.1%. You should get paid for simply owning a piece of the business, or else you're just speculating. That's not investing. The dividend here is more on the average side, but that's to be expected with companies that still grow, yet have predictable payouts. Return on equity. Return on equity is profit generated with the money shareholders have invested. I'm looking for an ROE of at least 11.75%. That means the company is putting our hard-earned investment dollars to good use. We see a good ROE meeting at least our minimum. We can attribute that to a high-margin business, but also good governance. Free cash flow. This is what's left after a company pays its day-to-day operating expenses. We always want a positive free cash flow. I'm looking for a free cash flow of at least $17.75 billion. That's money that can be used to grow our business's market dominance through research and development and acquisitions. We have a meager free cash flow that tells me the company has no dominant position and doesn't have enough free cash in hand to capture any market share. Before we get our company's final grade, consider joining my Patreon. You'll get access to every grade from every company I've analyzed. It's updated all the time. Head to patreon.com/GrowthShares or click on the link in the description. Before we get our company's final grade, here's a grade recap of the metrics we've covered. I'm looking for a good company or better. That means there's a good business behind our company and the price is attractive enough for us to buy in right now. Fortunately, our company looks good right now, and this looks like a stock I'd buy, or at least put on my watch list. This analysis is simple, yet an effective way to get your research started in the right direction. If you have a couple minutes, I'd love to know what kind of investor you are. Take my free survey. I left a link in the description. If not, check out my other analysis videos, and don't forget to subscribe for more. Invest wisely, and as always, take care of your money.